Welcome back to CMC Markets Trend Tracker Series. I'll be analysing three currency pairs for you. It's a big week coming up, so let's just jump straight in. First of all, the euro-dollar exchange rate. This week we have the ECB interest rate decision later in the week, and the ECB has consistently said that any decision on interest rates depends on economic data. We all know that German economic data has been very weak. They're in a recession, yet market pricing for a rate hike has increased to 40%. So it seems a little bit too high. Therefore, that creates a market between buyers and sellers. The currency market, although, has continued to sell the euro, which probably means it's not believing in an interest rate hike later this week. The cash rate in the Eurozone is currently 4.25%. It's not expected to increase, but it may be a line ball decision as we get closer to the interest rate meeting later in the week. Technically, though, the euro has been trending down very aggressively. You can see where the EMA is crossed over around the middle of August. You've got the 20 below the 50 EMA and diverging, moving apart. So that further supports a very strong downtrend in the euro. For those of you who are trading the euro dollar this week, be mindful of support at 106.70. Resistance comes in at 108.50, and also those EMA levels act as resistance also. And keep an eye on a couple of key events this week. I've already gone through the ECB interest rate decision, but before that, you've got the US inflation data. Both the CPI and PPI are out, and the German ZU, or otherwise known as Business Conditions Index. That's it. Next up, we have the dollar-yen exchange rate. Now, before I start with this exchange rate here, this morning we have had a big, quite a mini flash crash in the dollar-yen. It collapsed by 100 points, 100 pips, from 147.80 to 146.80, and that was on the back of a newspaper interview. The Bank of Japan Governor Ueda on Yomiuri newspaper, he mentioned that he's looking for a quiet exit of monetary easing this year, and he'll have enough data this year to exit negative interest rates in Japan. As you know, the cash rate is currently sitting at minus 0.1%. But that has had an immediate impact on the US dollar yen this morning. Still, with that move, the technical picture is very different. Technicals are very, very strong in dollar yen, rose very steadily last week. Close above that 146.50 resistance level. And that was in the back of safe haven demand for US dollars and also US yields rising, underpinning this movement. Now, what I'd say, for those of you who are trading US dollar versus yen, you've got to be mindful of further verbal intervention. As I mentioned, we had Bank of Japan Ueda speaking over the weekend. And early last week, we had the Ministry of Finance Vice Minister Kanda, and he was talking about the level of the yen, a little bit too weak, and he won't be ruling out any, all options are on the table, meaning intervention, for example. So keep an eye on that, because those comments, do have a very large impact on the movement of dollar yen when they come out. Technically, as I said here, dollar yen is trending higher. The pullbacks have been well supported for that last few weeks. Now, even though we had this 100-point drop this morning, we're still well above that 20-day EMA of 146, and also above support there, 144.80. They're your levels as dollar yen starts to retrace or pull back over the next few days. Keep an eye on stochastics. It's a little bit of a concern to me because stochastics are in overbought territory, and if they start to turn down, it may be an indicator or a signal for you that we've seen a short-term top in dollar yen for the week. And in the week ahead, as I mentioned earlier, let's focus on some key data coming up: US inflation data, CPI and PPI, and also Japanese industrial production. Levels to watch: support 144.80 is the key level. Top side resistance 150. And finally, we have the Australian dollar chart, and you can see here on the daily chart here, the Aussie closed the week last week near its lows. Now, what happened last week? As you know, the Reserve Bank of Australia kept interest rates unchanged at 4.1%. also had a lot of US dollar safe haven demand. So the Chinese government devalued the renminbi last week in order to boost their manufacturing and exports, and we'll see if that does come to fruition over the next few weeks and months. For the time being, the technical picture in the Aussie remains firmly down. You can see here the 20 EMA is diverging from the 50 EMA, and that does support the downtrend. The Australian dollar the last few weeks or month has failed to close above 65 cents. That is resistance. You can see 3 peaks there as well too, 3 red candles. The exact high for all those 3 candles was around 65.20. So there's your very strong resistance area, 65 figure / 65.20. Keep an eye on that going forward, and I would suspect that that zone will attract fresh shorts in the week ahead. Stochastics are oversold at the moment. They can remain in oversold territory for quite some time. However, keep an eye on that on the daily chart. If we do see that turnaround, then we may see a confirmed low in place. And therefore, you might want to drop down on the shorter term time frames, the hourly chart, the 30, 15-minute chart, or even the 5-minute chart, and trade pretty close to that support level. As I like to say, the support level coming up here, crucial, 63.60 on the downside, and top side, there's a lot of resistance there. First of all, the 20 EMA around 64.50, but in particular that 65 figure 20 zone. And the week ahead, US inflation data is key, CPI, PPI, but also any Chinese data, and we do happen to have the industrial production data out of China, and then Thursday, Australian employment data. You may recall last month we had a drop of 25,000 full-time jobs in the employment data. So the latest employment report coming out this Thursday, make sure we jump on the CMC Markets calendar and focus not only on the total number of employed, but the full-time component of that. That would be key, and it'll be a key indicator, and I'm sure to have a decent impact on the Australian US dollar and, of course, the Australian share market as well. So that concludes our analysis across the 3 currency pairs today. Thank you for watching. If you like the content, please subscribe below, and I'll look forward to seeing you in the next video.